Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked stock market timers. And while I have been trading here for over 30 years, recently started our short-term service. You can see our track record there, average over 700 trades a year, and we have moved our futures trading over to Striker Securities due to the increased exposure and interest in our report and our trades. All our futures will be traded, auto-traded through Striker to protect the integrity of our signals. We're also excited to announce we're almost in the coding phase of our new website, so we're excited about that. But first of all, we'd really like you guys to remember to hit that subscribe button, and don't forget to hit the reminder bell so you don't miss our alerts. And we appreciate you hitting the like button. We appreciate your patronage to our channel. We have a lot to talk about today, a major week this week for the markets, and we'll get right into it. With the S&P, we're going to do the S&P, gold, and Tesla today. It's November 29. Okay, so we had that February all-time high, went down to the panic lows in March. Excuse me, and you can see waves 1, 2, 1 up, 2 down, 3 up, and 4 down, and we're approaching new highs. We reached a high on November 9th. There's a couple little tricks in this pattern here. We'll get into that, and you can see that. Let's just do the retracement here. If we can real quick for wave 4, it retraced right in there at a 382 of the wave 3 high. Okay, so it looks like we've gone off to new highs here, and to make sure we're going to see a 3 up here, we need to see a break of this November 9th high, which is 3645.99. I believe the Russell has broke it. The Dow has broken it. The S&P will break it, and it should break it this week, possibly in the futures tonight, or at the open tomorrow. We can look at a 4-hour chart there, and you can see this is at October 30th low, and here is the first wave up. There's a retracement, and here we're off to the races. We'll get back on that 4-hour in a second. We can see the internal. We went over this. That's why I left the wave count up. From the October low, we had minor wave 1 and 2, minor wave 3 up here, 4 down, and 5 up here. That makes an intermediate wave 1. Okay, so and you can see the internal fractors. There's 5 waves within a 5 wave. So you can see 1, 2, 3, 4, and 5 within wave 3. Okay, and then we had a correction off of that. But that's not the exciting thing. The exciting thing is what's going on as far as time is concerned. And we can look at here. You can see we've from time to time mentioned our Fibonacci time spiral sequence. Sometimes these work, sometimes they don't. I had one work from 1999 to 2006. It caught almost every turning point. I've had them not even work for 55 days. So far, this one from the September 2nd high has caught every turning point and even internal turning points. You can look, I can make that bigger. You guys can see that that chart there where the numbers are and the dates are there. But suffice to say, we caught all these turns that are labeled alternately low, high, low, high, low. All of them have a slippage of no more than 4 trading days, but most of them have a slippage of 1 to 3 days, the most being 3. That's where we're looking for a 55-day low. Lows are, excuse me, almost always a Fibonacci 55 days from the high. This was no exception. It went out a plus 3 days and bottomed on 10:30. That allowed us to go long for our subscribers, and so far so good. We've made pretty good progress from those lows. I think we're up a good 400 points from there. But the most exciting thing is this is pointing to the next turning point. No guarantee that it'll mark it, but if this is to continue from the 55 days, the next turning point should be a high in the alternation of high-low, and it points to tomorrow, Monday, the 30th. Okay, so we're looking for a high Monday. If not, one day this week. If it does a little 3-day or 4-day slippage, if you will, it could top any day this week. But even more exciting than that is the next day in the sequence. If this alternates high and low, and this does call the November 30th plus a slippage of possible 3-day high, then the next number in the sequence should mark a low. And that pushes us out to January 24th of 2021. And what's interesting about that is not only is it the next number in the sequence, 144 days, alternating highs and lows, but if we make the high on November 30th, a Fibonacci 55 days from that is the same date of January 24th. So it'll be really interesting to see if this thing makes a high on November 30th or goes a few more days. But if it does, 55 days from that, we'd be looking for a significant low. And what we'd be looking for is a correction of the entire wave up. Okay, it could be that this is all of it from, let me get back here a little further. We could see a correction of all of this. This could be 1, 2, 3, 4, and that could be 5 as of Monday. It gains equality of just under 4,000. I think I may have it marked here. I may not. I think I do. There it is. Okay, so 5 gains equality of just under 4,000. Could it get there in a week? Anything's possible. We're sitting right now at 3650, basically just under 3650. So we're looking at, you know, a 300-400 point move in maybe one day, maybe 3-4 days, maybe this week. Okay, so but what we would be correcting then, let's just say that it goes up there, we would have to correct this entire 5-wave advance from the panic low in March. Okay, so let's put that up to 4,000 just to get an idea of what we'd be looking at. Let's just say, you know, 5 goes just under 4,000. We're coming from 2191, if you can remember that back in March. I remember that number specifically. And let's put this is sticking a little bit. Let's get this right under 4,000. That's pretty good. Okay, so what we'd be looking at, we're getting a little bit ahead of ourselves, but it's good to know in advance to know what we're looking at or what we're looking for. Okay, a 382 retracement, which is the previous 4th wave, would take us from just about 4,000 down to 3296, or 700 point decline. And if it goes in time, it'll top the first week in November, this week, and then bottom the last week of January. So you're looking at basically a 2-month decline. 700 points there, 50% retracement gives us 3,082, and a 618 gives us 2869. And that's if we're just correcting this most recent 5-wave advance. Okay, so we're looking for a major top this week. Okay, otherwise, if it goes up much higher, we'll look at that extension and see what all this unfolds to. I can't imagine this would go 1, 2, 3, 4, 5. That's why we want to look at our alternate count here, which I have it. This is a daily bar. You can see our Fibonacci time spiral points to November 30th. If it does a plus 3-day slippage like the rest, it could be one day this week. There's the numerical Fibonacci extension or multiple, 5 equals 1, just under 4,000. And in our alternate count, we could say that this is 4, and we're putting in a diagonal triangle which overlaps, where this would be 1, this would be 2, this would be 3, this would be 4, and we'll get a 5, one more wave up, and that would be the end of the move. In that case, it probably would not reach 39.96, but as long as 5 is higher than 3, it satisfies Elliott Wave. Actually, it doesn't have to be. You could have a truncated 5th, but I might be getting too deep in the weeds for you guys here. But we're looking for a top this week, and then a retracement of all of this. That pretty much puts it in perspective. So that's the S&P analysis. Let's see if there's anything we missed. We had that there. There's our breakdown from the October 30th low. That was a 55-day. The next one is the Monday, November 30th, we'll see what that brings, okay? Let's look at gold. In gold, we had that well, I didn't get this ready here, did I? A 5-wave advance. Okay, I'll do it for you guys here real quick. I'm just going to do the 3rd wave retracement. I think I have one of these on there. Okay, and this is our, let's get our 5 waves up here for you guys. There's the low. I think that was it April or yeah, that was May. It was 1 there and 2 there and 3 there and 4 here. As you know, 4 cannot go lower than the high of 1. And we don't want this 5 here. We want it way up here. Okay, so we're right near it. The high of 1 is 1765. The low so far is 1774. So we have 9 points to play with. A break of this means that we're not going to see a 5 up, okay? So we're going to watch this really closely. This is a triangle with a throw under. I think I have that pictured here for you guys. Let's see. Here's gold. Yeah, here we go. There is that March low. There's wave 1 up, 2 down. There's 3 up into the August high. And you can see the triangle here. It's a perfect descending triangle with a flat bottom and a descending top. So we have an A, B, A down, B up, C down, D up, and E. And in Elliott's books, he talks about throw unders and throw overs and E waves. This is a classic throw under. Either that or it's just wrong. And again, there's our make or break point, the wave 1 high of 1765. We're right on the cusp right now. So we'll see where that goes. Excuse me again. Let's look at Tesla. Very exciting with Tesla. You know, we had that 3rd wave up here on September 1st. And again, we have an ascending triangle now where we have an A down, a B up, a C down, a D up. There again is the throw under in wave E, just like in gold, okay? So that is a 4. You got a flat top and an ascending bottom. So that'll break out, and we've got wave 1 up here, wave 2 down. Let's just do that for you guys here real quick. Let me get out my my waves, patterns here, the 1, 2, 3, 4, 5. So from that wave 4 low, we had a 1, 2, a 3, a 4, and a 5. If this thing isn't complete, it's sure pattern-wise it looks beautiful. There's 1, 2, 3, 4, 5. I think the extensions are pretty clear here. We can look at a 1, and we can see wave 3 is almost a 1.618 of 1. I may have wanted to put that over here with the 2, okay? And if we measure from the wave 4 low, we have, I thought it was 6.0 something. Let's look at that again with our other chart there. Let me get that gold chart out for you guys. And there is, I'm sorry, the Tesla chart. My apologies. Let's go here. There's our Tesla. And there we go. There's that ascending triangle, the E wave throw under on the 4th wave low. By the way, Tesla's moving like the markets. It bottoms, it topped. Markets topped on 9.2. It topped on 9.1. Wave 4 low on 10.30, just like that. We're looking for a high. We have where 5 equals 1 at 6.07. And I believe that high is just under that now. In fact, we may, let's peek over at the futures. Yeah, we had a high here of, it looks like about 5.99. Let me get a little closer here. 5.97. Yeah, so, and there's that 6.04 again. You can see the futures are down just a little bit. So, yeah. If it's going to go higher, it looks like a really short ceiling or low ceiling, if you will. But again, you can see the internal wave count here on a 5-minute chart. There's that October 30 low. There's wave 1 up. Yeah, there's that wave 2 down. I mislabeled it over here in the other one. And you can see the fractal, the internal wave counts 1, 2, 3, 4, 5 for 3, 4 down here. I really thought it ended here with a 1, 2, 3, 4, 5, but it extended. You can either extend wave 3 or wave 5, but we're looking at current levels. Maybe it pops up 6.04. Maybe it does a blow off top. But again, with Tesla, we're looking at correcting that entire move up, well, I don't know if I still have that here, but all the way back to the 2018 low. You can see there's 3. Let me get this in here. You can see it popped up there. There's a 1, 2, 3, 4, 5, 3, 4, and 5. We'll go through the target lows. We've done it before, but suffice to say it'll be a significant decline. There was 3, there was 2, there was 1. There's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I think it was, that's the 18 low. We'll just do it from here. We'll redo this to a better exact number when we get into the future here. Get up to that 60. Let's get 604.93. That's close. Again, the 382 takes us to 392. It's normal to correct within the previous 4th wave, and this was a 3 and that was a 4. We can put those labels up here for you guys. All right, just to avoid any confusion. There's the 1, there's the 2. The 3rd wave extended all the way up here. 4 came down to here, and there's our 5 up there. Okay, so we're looking at 605 for a target. That's all but there within a point. I wouldn't be surprised if it topped the same time the S&P and all the other indexes topped, which should be Monday or this week, and then a significant decline. We've got 5 waves to correct, and this is primary degree. That's got intermediate on there. Okay, so in review, we can look at, this is the most important thing. This thing, so far so good. There's no guarantee that 89 days will mark the high, but it has called every one of them so far. So we'll see what happens with that one. If it does, then we're looking for the next one in the sequence, 144 days, which is January 24th, and that'll move if this goes higher later than the 30th of November. Again, thank you so much. I really appreciate you guys patronizing the channel. And until next time, take care, everyone.